Price movement in the market is fundamentally driven by the laws of supply and demand. With order flow, you can track the volume traded at each price level within every candlestick. What's particularly fascinating about order flow analysis is its ability to reveal zones of absolute imbalance, areas where either buyers or sellers are entirely absent. By analyzing order flow, you gain a deeper understanding of market dynamics, helping you make informed trading decisions. However, manually analyzing order flow can be time-consuming, overwhelming, and even strain your computer's performance with unnecessary data. That's where Imbalance Volume Sensor steps in. This tool automates the process of identifying absolute imbalance zones through order flow, giving you actionable trading signals without the need for manual effort. What sets this indicator apart is its foundation in three critical factors: trend, order flow, and price action. We're confident in saying this is the first ever indicator that applies order flow analysis on Renko bars. On the chart, you'll first notice clusters of green highlighted areas. Let's zoom in for a closer look at how these zones are formed. Upon zooming in, you'll see that these zones are created by three candles, each analyzed using order flow data. The left column represents sell volume, while the right column represents buy volume. What stands out here is the recurring presence of zeros in the sell column at certain price levels. This means no sell orders were executed, while buy orders are still active in the corresponding buy column. This clear imbalance highlights buyers dominating completely at these levels. This imbalance creates what we call absolute imbalance zones in this case, specifically absolute bullish imbalance zones. When multiple absolute imbalance zones form consecutively, following user-defined settings, they combine into a larger area called the overall imbalance zone. These zones are crucial as they act as key support and resistance levels, where price often reacts strongly. In this example, the overall imbalance zone acts as a support zone. Notice how, when the price retests this zone, it reacts strongly and resumes its upward trend. At the same time, a suggested analysis signal is generated when the price returns to the zone, confirming the potential for the uptrend to continue. Now, just as we saw absolute bullish imbalance zones, clusters of red highlighted zones appear here. Let's zoom in on the candles to examine the price levels in detail. Looking closely at the chart, you'll notice the highlighted area on the right column of the red candle, where consecutive price levels display zeros. This clearly indicates that no buy orders were executed at these levels, reflecting the absolute dominance of sellers during the candle's formation. When multiple absolute bearish imbalance zones appear consecutively, based on adjustable user settings, they form a larger overall imbalance zone. This zone serves as a resistance zone. You'll notice that when the price revisits this resistance zone, it reacts strongly and then continues its downward trend. At the same time, the trading signal confirms the possibility of the price continuing its downward movement as it returns to the zone. The imbalance volume sensor doesn't just provide analysis signals based on order flow. In cases where the market is moving significantly, it also generates signals by analyzing volume delta through two specific signals: volume delta and trend weak. Let's first explore the volume delta signal in this uptrend. We'll zoom in so you can clearly see the details of this signal. When you observe the candles, you'll notice that the volume delta signal occurs when the delta is negative, yet the candle is still green. We refer to this as effort but no result. In this scenario, the sell side is dominating, but by the time the candle closes, it's still green. This indicates that buyers have completely absorbed the selling pressure from the sellers. If you examine the order flow information within this signal candle, you'll see that buyers were proactive in purchasing at higher price levels, which ultimately led to the candle closing higher. So if you miss an order flow signal, you can still enter a trade based on the volume delta signal. This is particularly useful for traders using scalping strategies, especially in volatile market conditions. Next, let's dive into the trend week signal, which is generated by comparing volume delta between reversal candles in a trend that's already been identified. You might be wondering, how do we actually identify the trend with this indicator? Up until now, we haven't mentioned trend direction. Don't worry, we'll unlock the final signal of this indicator. Trend start. Once activated, the chart will display a trend signal on the candle where the trend changes, marked with a highlighted line. Below the chart, you'll see a small histogram showing market trend direction, with pink indicating a downtrend and blue indicating an uptrend. Let's go back to the trend week signal. What makes it unique is that it compares the volume delta of each reversal candle against the current trend, and it generates a signal when the candle with the largest volume delta is identified in the recent range. As you can see, the price trend changes once the trend week signal is triggered, and the trend start signal follows shortly after, marking the start of a new trend. Now, we will demonstrate entering trades using this indicator. Let's observe together to see if it delivers the expected effectiveness. In this video, we introduced a tool that applies order flow analysis to Renko bars to identify absolute imbalance zones. The video explains the indicator's mechanism, usage, and how it provides trading signals. The product is now available on RenkoKings.com and ninZa.co. Don't forget to like, subscribe, and hit the notification bell so you won't miss our next helpful videos.